The more controversial or the more important an upgrade is to a network, you're going to see potentially more extra steps, let's say, more ways to verify that you are qualified to have opinions on economics or technical details or long-term token distributions. The idea that every token holder is equally capable of making those decisions, I think that we're going to quickly move out of that kind of era of governance.
Hey everyone, quick shout out to today's sponsor, Namada. Namada is currently entering phase 3 of their mainnet rollout, so make sure you check it out by following the link in today's show notes. We'll talk more about Namada later today, but for now, let's get started. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. You got a roundtable here today, so joined by my occasional co-host Myles, Jim Parillo, and Cooper Kunz. Guys, welcome to the show.
Thanks for having me.
Thanks for having us.
Great we actually have back. A fifth guest.
Yeah, special guest.
Sure. Yeah, we're not sure if we're going to get too much airtime today. Little baby Parillo.
I'm going to try my best to keep quiet other than when I'm supposed to be speaking. And so I'll be on mute for quite a bit of when I'm not talking, but this is baby Parillo. I don't know if I'm allowed to say his name. I don't know where the sunglasses are. My wife asked me to put sunglasses on him, but I don't know where they are. So you're just going to see half his face. And we'll find out how many people actually watch the video versus listen on Spotify or on Apple. We'll see who's watching it and who's not actually watching the podcast. So yeah. Interesting. But thanks for having me.
We'll see what we can do to bring him in as a recurring guest here. But guys, this is going to be a fun one. We're going to be talking about governance here, specifically L1 governance, and see how far we can go down this route. So the genesis for this episode and sort of the jumping off point that I want to turn it over to all of you is, we've been following SIMD 228 over in Solana land relatively closely. And there's been a lot of really good analysis on the merits of the particular proposal. I would encourage you guys to head over to Lightspeed or 0x Research, where there have been a couple of very in-depth episodes breaking down the pros and the cons. This ultimately ended up not passing last night, or at least we're recording this on Friday morning, the 14th. But the other interesting component of the other interesting angle, Myles, you and I were talking, is that this almost looked like a Cosmos style governance vote, where actually validator governance was a huge feature, right? So, if you've ever kind of followed along in the Cosmos ecosystem around some of these more contentious voting sides of things, that's what this looked like a little bit. And so it was just interesting. I hadn't really realized that there was this stake-weighted validator governance in Solana. I think some other people were a little bit surprised about that as well. And there's a question of whether or not that's good or bad. What are the pros and cons of that specific approach? But I think it brings up an interesting topic of how does governance around L1s work in general? I think this has been a relatively opaque process in the past, relatively opaque, part of the crypto world. So maybe we can look at some of the different governance models around Bitcoin, Ethereum, Solana, Celestia by way of example here, and then we can kind of maybe build our way up the stack and end discussing sort of the modern state of DAOs. But yeah, whoever is maybe Myles, I can turn it over to you first, and we can talk a little bit about the.
Yeah, absolutely. So I'd say I'm working on Delta Network, and I'm thinking a lot about this stuff right now. We'll be a layer one, and the more we kind of dig in, just the more I appreciate how hard L1 governance is. There really is no silver bullet that is the answer we've all been looking for. Every sort of approach has a lot of trade-offs. And in general, the sort of approaches that we've seen is on one end of the spectrum, you have more or less not formalized, but sort of shadow governance led by the foundations and the development companies. So this is where Sui is. This is where Solana was before they introduced validator voting. And then you've got going kind of across the spectrum, validator voting. So any validator, this is what we see in Solana right now. And then on the other end of the spectrum, you've got validator and token holder voting. So this is what we see in Cosmos, where validators vote, but token holders can override that vote. So you have basically, as a default, you defer to your validator, but if you feel strongly about a proposal, you can go ahead and vote yourself. And yeah, I think there's also a way to look at this between the types of decisions that need to be made in L1 governance, which are very different, right? Protocol upgrades, I think, fall between there's kind of two flavors of it. There's like really big structural changes like the merge, right? Then you have parameter changes. And I think, that is typically focused on the economics. So that's more like this latest Solana proposal. And then you've got some projects that decide to also have the treasury governed by token holders and by validators. And so it's more just, pure like spending decisions. And all of these, they don't need to, you don't need to pick one governance type that covers all of these sort of decisions. We haven't seen any of these projects like Jim, we were just talking about this, where maybe you should have different sort of decision-making processes for the different categories of decisions, right? Like maybe the folks that vote on protocol changes should be different than the people that are voting on treasury spend. Maybe treasury spend should just not involve any token holder voting. Maybe that should just be the foundation, right? And yeah, then I think the voice of the token holder should come through on maybe some of the economic side. So yeah, I'll pause there. I know you guys have some thoughts, but that's the kind of the landscape of, I guess, decisions that need to be made and the different sort of decision-making structures that at least we see right now in the space.
I guess just to add a little bit to that, I guess, governance has always sort of existed, right? And probably I'm not a proof of work like expert, and I haven't studied the history of proof of work, right? But essentially miners had to like there's like at some point the upgrade happens when enough miners switch over, right? And if not, then there's like sort of like there's two chains for a little while, and there's a fork that exists, and ultimately, like as more and more miners adopt the new parameters or the new, the upgrade, like all of a sudden, like that becomes like the canonical chain, right? So like governance and like whether it's validators or miners, like have generally been in charge, I think, like historically, of like when upgrades occur, when there's changes to the blockchain. Proof of stake gave token holders more than just the tokens that they could buy. It gave them a stake in like the network in a way in which, like, for some chains, they decided to give that stake actually like meaningful governance power. And I think Cosmos was one of those that like kind of went full on board with like, token holders have a right to vote on everything from economics to finances to upgrades. And I think the one thing, like, as we were looking, I mean, we spent a lot of time in Cosmos. I spent a lot of time in Cosmos. I think, Mike, you spent a lot of time in Cosmos. Like, Myles, you spent a ton of time in Cosmos, right?
Too much.
Like, I would say I much as well. And like, I literally did brain damage, I think, to meet myself in doing it at times. But you're in the forums, you're talking to like random individuals that have loud mouths, and you're not even sure if they have a stake in the, they don't even know if they have tokens, right? They might just be causing trouble, right? Like causing drama for no other reason other than like they don't have anything better to do with their lives. And it became very contentious, and like to the point where I was like, I think personally, when it comes to these things, particularly like in Cosmos, but if there is going to be like voting in general, is what we noticed was two things, right? The first was like when there were parameter changes that had to do with like inflation, when it had to do with like operators, like what operators, like how they make money. They generally were in favor of increasing inflation, and they were generally not in favor of lowering inflation. And that's because it hits their bottom line, right? Token holders, on the other hand, very well may be in favor of this because they like I think Celestia is a good example where people are like, hey, the inflation rate is way too high. We're paying way too much for security. We think it should be lower at this point in time. And now you have like these, like I would argue that most token holders, small token holders, are apathetic. There's a lot of governance votes that go through on Cosmos. And so you just get tired and you're like, I can't freaking pay attention to this. Like the validator is voting on my behalf. And like, I got better things to do than think about 100 proposals a year. I may not even be informed on all of them. So, but I think like my general take here is that like it feels like to me that we're at a point where there are some things that validators should vote on, and there are some things that they should kind of keep off limits as far as like voting with their stake. If they hold tokens themselves, they should vote with those tokens, right? And if they have a stake of other people's tokens, maybe they should just maybe like, and I think Figment has done this, I know for a fact, like they're kind of like, I think there's some regulatory things that they're concerned with, but like I also know that they're like, some of these are just like not things we think we should be voting on, and we're going to abstain from voting. And those things are typically like inflation things, like finance things. Like, should we spend on this? Like, what should we use with the community pool for? Like, this is the token holders who should be voting on this. Like, this is the future of like how this network is going to operate financially. And like token holders should have a say in this. And like, we should kind of keep our opinions to ourselves to the extent that like we're not voting with our own tokens. Now, if it comes to an upgrade, right? Like, I am not technical to the point where I can like look at an upgrade and go, yeah, this is the bee's knees, or like, hey, there's a bunch of problems in here. My hope is that the validators are running this client, right? Like on testnet, they have a sense of whether it works or not. And that they're the technical experts and the domain experts here to actually make that decision. And so they should vote on those, right? Like if it's an upgrade, validators, you guys should vote, right? If it's like a financial, or economic, like adjustment to like how tokenomics is going to work on the network, this is for L1s, of course. Like operators, like stay out of it, essentially, is like my take is like, yes, you're running the network, but like I don't get to decide how much Figment Capital pays me. And like most employees don't get a chance to like tell you like, hey, this is how much I want to make. And like, and if not, like they can say like, or I quit, and fine, like you can leave the network, right? But like, you don't get a chance to go like, this is what I want to pay myself, and I vote for a raise. Like, that's just not how the real world works. And I don't think it should work here for L1s either.
I think you're getting to, from my perspective, one of the interesting reasons that may have prompted the Solana ecosystem to put this vote at the forefront on both social media and other things, because at the end of the day, this is a relatively controversial proposal and upgrade that's being voted on potentially by the beneficiaries of the proposal, or the people that are stand to lose from the proposal itself. And so I think that, Mike was talking about how he didn't know that Solana had this kind of like public token-based voting in this capacity. At least I've never seen it as publicly advertised on Twitter and social media, and I don't think that that's a coincidence by virtue of what they were voting on. I think that at the end of the day, a lot of the spectrum of voting is somewhat of a civil problem, right? Like at the end of the day, you're trying to have people who care provably about your community make decisions with respect to the future of what this project is doing. And like a naive civil resistance mechanism is like, this person has a token, they probably care about the future of this thing. If they vote badly or we upgrade something badly, like those tokens are going to go down in value, right? And so if you look at the spectrum of token-based voting to validator voting, I jokingly, and my friend Lasse at Aztec calls validator voting just token voting with extra steps. Because at the end of the day, you just have to take tokens, put them in a smart contract, and actually run a Docker container on some infrastructure that you're maintaining. And all of a sudden, you're like this separate thing that has apparently more vested interest in the outcome of the network. And therefore, you should probably have a stronger opinion about what those upgrades and what those changes are going to be, because they'll impact you because you've done these extra steps. You've vested more into this network and to what it's doing. So I think that that's like a general trend that we're seeing is, I think you articulated this well, is that like the more controversial or the more important an upgrade is to a network, you're going to see potentially more extra steps, let's say, more ways to verify that you are qualified to have opinions on economics or technical details or long-term token distributions. The idea that every token holder is equally capable of making those decisions. I think that we're going to quickly move out of that kind of era of governance.
This episode is brought to you by Namada. Namada is the shielded asset hub rewarding you for protecting the multi-chain. Shield your data across any asset and any chain, and get shielding rewards for helping strengthen data protection for everyone. To learn more, follow the link in the description below. Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your ledger today. So let's start to slot this into some different models for governance writ large here. And I think that, I think a lot of governance has been centered around this idea of like decentralized decision making in crypto, or decentralized governance. I would really encourage people. I don't know if anyone on this call has a very clear, crisp definition of what that really means. But I'd be very curious what people really mean by that statement. In my opinion, governance should be suited towards how can we make the best decisions for this organization? What is a system that we can use to come to the best decisions for what this organization is trying to do? And I would give you this is where I kind of hate when you reason by example here, but I want to slot L1s into like two different forms of governance that exist, which is like corporate governance in the United States versus the government and how the government is set up in the United States. One of the commonalities here is that there's no such thing as direct democracy, right? Like there's not one-to-one voting as a US citizen. You can vote for your representative. Same thing, like you as a Tesla shareholder get a voice, but that doesn't mean that it's like one-to-one voting on even major things, right? Like for the most part, like usually someone else is voting on your behalf. It's representative in that sense. However, the job of government and the job of corporations are different. The scale of what they're trying to do is different. And so in the government in the US, you have like different sets of stakeholders and checks and balances, right? You have an executive, judicial, legislative branch, which slows things down, which is actually, in most cases, not all, a value prop. And so I think it makes sense maybe now to look at who are the stakeholders within L1s. And this is actually where it differs a little bit based on the L1, where it is in its maturity. But, in Bitcoin, you had like the three sets of stakeholders here are the core devs, the node operators, and the miners. All right, like that's you could also say, I think it's uncomfortable to say this a little bit, but like increasingly exchanges, and I think they probably have some sort of voice or influence, right? You saw this actually, that they directly had this during the Bitcoin block size wars back in the day. Ethereum looks a little bit different from that. There's the Ethereum Foundation. There are the core devs, and then you kind of have the client teams are very big in terms of governance there, but there's no like labs entity, right? And then in Solana land, it looks a little bit different. You've got Solana Labs. You've also got Onza, which is a spinoff of Labs. You probably increasingly are going to have Firedancer, Jito, but like some of the core infrastructure folks, I get the sense like kind of have a seat at the governance table. Also in proof of stake systems, you're absolutely right. Like the token holders themselves or aggregate holders of those tokens have a voice in governance more. And Celestia, to be honest, I'm not 100% sure. It's a much smaller protocol today. But I would be curious, like, what do you guys think? What do you guys think the stakeholders are, like the important stakeholders are that matter? Maybe we can zoom in here a little bit on the role of the foundation, especially in the early stages of developing a protocol.
I just want to add one more thing too, which is like something I've like learned, which was that Solana Foundation suggests and like promotes like applications to run their own validator as well. I just want to point that out because like it might be a valuable like piece of the puzzle as we talk about this. Yeah,
Myles, you want to riff on that a little bit because I find that very interesting as well.
Yeah, definitely. I think that's right. At least you're like I don't know, the landscape of stakeholders is correct. I think another, like you just talked about corporate governance and the actual US government. I think it's also interesting to look at some of the biggest open source projects out there, like Linux, Kubernetes, even like Mozilla and things like that. They are, for the most part, either centrally, like have a benevolent dictator, or they have a couple committees, right? And like the equivalent of validators for them is mainly like the big cloud platforms through which people actually use these services, right? And then you have apps on top. And I think the difference with blockchains where things get really complicated is like they're not monetizing these open source projects, right? Versus the governors of the token actually do want to make money from the underlying open source software, essentially. And I think the problem is, it's very, very hard to like properly have all of these stakeholders represented in the decision-making process, especially the demand side of apps. And I think that, there's, you could see a world where you somehow allow apps to have like some sort of maybe there's like a committee of apps, right? That are elected like amongst each other, and they have some sort of, formalized voice and governance. I think the more complicated you make it, sometimes it just opens up yourself to even more attack vectors. Like we've seen when you give apps a lot of like governance in, say, like L2s, they tend to just pay themselves incentives. So that's not great either. But yeah, I think for us at Delta, I'm really excited about the idea of applications running their own validators, and it's very, very different. I guess the system itself is very different than something like Solana, and it might be a lot more lightweight. But that might actually be the right answer, right? Is how do you actually get that representation without making this like an overly complex system? Is just having the apps run validators, right? And it's just, I think, pretty expensive, but the Solana Foundation and other foundations can subsidize that with, their treasury, basically from a staking standpoint, so that they have an actual, vote. Yeah, that might be actually, I love that idea from Toli, and that's something that I think is going to be, very, very important for Delta. But I think it's kind of challenging because a lot of app developers, they just don't care. They don't want to run a bunch of like DevOps, right? They just want to build a great app.
Well, I think that was one of the original kind of value propositions of blockchains, right? Is that you get guaranteed immutable places to deploy code that has forever backwards compatibility, right? Like the credible neutrality of these systems is inherent in the design. And that means that like application developers are deploying things with the expectation that governance is never going to rug them, essentially. And if that happens, like that's going to be really, really controversial. I think we're actually starting to see teases of this at the EF with EOF and the Ethereum object format, where it actually does potentially break people's implementations or their smart contracts in some, kind of unforeseen ways. And I think that that's going to be like a pretty controversial thing in the Ethereum roadmap. But on the note of foundations, I think that, the stakeholder roles have been interesting really historically because you've seen teams use the foundation labs kind of DAO split with respect to governance as a form of like kind of legal guidance, right? Like you want to have a sufficient decentralized ecosystem to the point that like there is no key single stakeholder that's responsible for this network. And you want to distribute that to like a minimal set of parties. And like the minimal set of parties in a lot of cases is like the labs, the foundation entity, and a token holder based DAO. And so I think that we see a lot of this, like the architecture of who's a stakeholder in these networks is actually kind of an artifact of the lack of regulatory clarity that we've seen in the industry, rather than thinking from first principles, like what is the right model to actually govern these networks. And I think that that's actually been like a large disservice to the industry, the people that are, holding or interested in these tokens and the assets, and also the people running and building these networks. You're in this weird situation where like a lot of the labs teams actually don't want to go talk to the foundation or don't want to talk to the DAO because they're supposed to have this kind of like arm's distance relationship between them. And it makes it really, really difficult for them to do their jobs effectively. When I was at Hedera, I used to work at Hedera Hashgraph, which is kind of an enterprise-focused layer one. And one of the unique things about Hedera is that the only people who can run validators are institutions who are on the Hedera Governing Council, who technically co-own or operate the LLC, which is a US-based entity. And so they have this really weird vertical integration between validators, operators, customers, and owners, in a way that they actually are like the only people who can change or steward this network are the people that we want. And it's actually a really, really interesting model that they started doing in 2018. And we saw that be copied with like Libra in 2019 as a follow-on announcement. And I think that actually kind of like the time for Libra is now. I think a lot of people are talking about this now, but like I hope that we're moving out of this world where you have to have these multiple different entities. When you actually can think from first principles, what is the ideal governance of the thing that we're building? And long way to say that, like, I don't think any of the current setups or stakeholder models are actually from first principles and like really thoughtfully designed. I think that they're kind of just like this hodgepodge of what the lawyers told them to do and like what tools were available at the time and like what sounds good to the market and all these other things. And I hope that we see this kind of like return to first principles in a meaningful way.
Yeah, I couldn't agree more. I mean, Mike, you said this for the very beginning of the pod, like what are we trying to do here? We're just trying to make the best decisions for these organizations. And if you, maybe we're in a world now where you're not afraid of getting a Wells notice. And so you can actually come up with a system that is thinking about what is the, maximizing the long-term potential of the network. And the question is, at what point or like in what circumstances is the right decision a decentralized process? Is that, I think at this point, Solana might be so big that this sort of like foundation devco led shadow governance, they felt like this is actually, it's becoming a problem. We have too many diverse opinions here. And let's say that they push something where it turns out they were in the minority and it would have been voted down if there was a vote. People will get more and more pissed off, basically, and they'll start to leave the network. And so I think the strategy here is less so regulatory for Solana, potentially. Maybe it is, maybe it's not. But more so like, okay, fine, let's have a vote. You can't argue with a vote. Like, it's just objective, right? And whether or not the right people were voting, that's a different conversation. But I think that maybe that's the idea, is when you get to a certain size, you just want to make things a little bit less controversial. And by doing so, you might actually, end up with more governance noise, as we're seeing now. So it's funny who's celebrating this versus, folks that might be in Cosmos are like, welcome to hell. Like, now you have governance. So,
I think I tweeted that. I tweeted totally. I was like, welcome to the Cosmos, Solana.
Welcome to the Thunderdome, baby.
Welcome to the Thunderdome. Well, there's a few things to that, right? Like you mentioned the shadow governance. It's like, look, when you're subsidizing and the foundation is giving out tokens and staking, like, interestingly enough, and like to get you active on the network, like, interestingly enough, you can pick up the phone and you go, hey, I need you to vote, and I need you to vote yes. And we would love it if you would consider voting for X, right? And as you get bigger, as you get more decentralized, as you reduce those subsidies, people start to not like remember, like, hey, remember who got you here, kid? It's like, that's not. I'm here. I'm here now, and like, you're not subsidizing me. You're not paying me to be part of the network. I'm an active member, and I have my own opinions, right? I'm out of the nest, right? And so like that's like part of the pain and the process of doing this. It's gonna be messy. The other thing I was gonna say is that, like, I think as you get bigger, these decisions and let's say, like, Solana has had a tremendous like blow up, like a glow up this cycle, right? Like, everything has been like kind of more like Ethereum's on like let's think about this, let's ponder and pontificate, and like eventually we'll make a change, and the roadmap is 5 years long, and that's when you'll see real change. And then you have Solana that's like, let's go fast, let's try things, let's break things, and if it breaks, we'll just fix it, right? And I think maybe what you're seeing is that, like, as this network gets more and more valuable, as it looks less and less like a beta network, like, there's going to be people who are making substantial amounts of money by running infrastructure or what have you. And they're going to say, like, hey, I know that everything has always been, let's move fast, and like, let's fix things in prod. Like, let's fix the plane let's build the plane in midair. But maybe we're starting to get to a point of maturation where, like, actually there needs to be more debate. There needs to be a slight, like, doesn't have to be years out, but like maybe some people didn't feel like they had time, or that it had been rushed in some way, and maybe more time for something this important should have been taken, and more conversation should have happened, than did. I'm not privy to those conversations, so I don't know. Maybe there was a ton of conversations, but something about it seemed rushed to someone or several people, because they didn't vote yes on it.
Namada is the shielded asset hub rewarding you to protect the multi-chain. Built to give you full control over sharing your personal information, Namada brings data protection to existing assets, applications, and networks. Namada ends the era of transparency by default, enabling shielded transfers and shielded cross-chain actions to protect your data even when interacting with transparent chains. Namada also introduces a novel shielding rewards system. By holding your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect NAM rewards in return. To learn more about Namada, follow the link in the description below. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today.
One actually interesting data point here, by the way. This is put together by the latest Blockworks research data chat here, Silodelic, but this is actually a chart of the who voted yes or no based on whether or not they're supported by the Solana Foundation delegation program. So you saw slightly more no votes on the SFDP validators, which is interesting, especially if you think the Solana Foundation supported this. The connection there being that they're probably smaller validators in general. And the economics, by the way, are challenging here. Of the number one cost for a Solana validator is votes. So you have to vote on every block. And so you need a certain amount of stake before you can even break even or become profitable. So that's why the Solana Foundation subsidizes some of the smaller devs until they can.
So I take back that first point. That first point is sort of irrelevant here, right?
Yeah.
But still.
But in theory, right? In theory, it's a vector, right? Like over time. And so I think actually, I want to, Cooper, get to your point because you made a really, I love that point about just DAOs in general. And I would almost like to end there because I really think this is a moment in time everyone should be questioning sacred cows and being very honest with ourselves about what worked, what hasn't worked over the course of the last 10 years, and what might have changed, what rules on the ground might have changed, so that we might not need some of the structures that we thought we needed in the past. But I do think that some of this actually, it bears mentioning here that maybe the point of when you're trying to decide the optimal governance structure, I think you have to keep in mind what is the end state of what I'm trying to build here, right? And I think for something like Bitcoin, the fact that the governance is so ossified at this point that it almost can't do anything is actually quite good product governance fit for what it's trying to be, which is this store of value app chain for money. You don't need a whole, like the hurdle rate should be extremely high when it comes to making changes there. So governance is working quite well. For some of these other L1s like Ethereum or Solana, they might need to deal with more complexity because they have an economy that's building on top of them and the tech changes extremely frequently. So you might need a slightly different governance structure, right? And then you can actually look at something like, I think a lot of the old like 2017, 2018 ideas are going to get retried. You could look at something like Hedera Hashgraph, be like, hey, maybe we actually want basically a POA vertically integrated system here. This is going to be a more US-based operating system kind of private database thing, right? And maybe that's going to work for some people. It really just depends on what is your ultimate end state and why do you think people are going to hold these L1s, right? Like that would never work for Bitcoin where you're trying to be a global non-sovereign, store of value digital gold. But you'll probably actually see different buckets of L1s become different things in the end state, right? That'd be my guess.
I actually totally agree with that. And I think that Ethereum and like the Ethereum Foundation is like a good example of this, right? Like the EF had a pretty clear roadmap maybe 2 years ago that they wanted to ossify after that. And like ossification has always been like the end game for Ethereum. And they want to get to a state where they're no longer needing to push through major changes like the merge or like implementing like Verkle or Binius or like, adding ZK to the Beam chain. I think that Ethereum as like, the value proposition of like, this is the world computer, you can deploy programs to it that'll never be rugged, you have guaranteed censorship resistance, immutability. I actually think that their governance was actually really well aligned with the products that they've historically tried to build. I think now in the roll-up centric roadmap and kind of like a lot of these, I would say like tangential product directions, whether you're talking about based rollups, pre-confirmation, native rollups, and all these other things, are actually kind of a departure from that original ossification-based vision of Ethereum in a way. And so I think that the current EF structure with like 2 directors and you have Etherealized now as like a US-based entity, really is not, to me, and I've said this publicly on Twitter, is not inspiring a huge amount of confidence. And it's a departure from that ossification vision that I really liked before. I think if you asked me 2 years ago, what are the odds that Ethereum deploys a breaking change that bricks some people's smart contracts, I would say absolutely not. If you ask me now, what are the odds that they eventually deploy change that breaks people's smart contracts, I'd be like, I don't know. Maybe they would do that eventually. Like, people are strongly advocating for EOF and all these other things. And I actually think that that's one of the biggest problems potentially with Ethereum right now, is the lack of, like, I would say, governance to, product fit that you're talking about, Mike, is that, like, it's just unclear. One, what the roadmap is. It's unclear if the governance is set up to help achieve that roadmap in the right way. And it's even unclear if that's the right roadmap for who they're building for. And I think that you can look at other ecosystems that potentially have much better governance product fit. I think that the thing that is in, like, kind of, flagging some alarms in all of our heads now, and why we're talking about this on a podcast, is because the Solana move to token-based voting or validator-based voting is somewhat of a departure from what people have historically liked about Solana, right? They enjoyed the benevolent dictatorship of the core contributors, the teams that we've talked about previously. And so this is actually kind of a departure in a lot of ways from what I would say was the governance to, product fit that Solana's historically had. And I think it's a little bit unclear about how this plays out medium to long term.
Wait, Myles, sorry, before you jump in there,
Please.
can I just read this tweet? I thought this was super interesting from Mert. So this was, I think, yesterday. TBH, even if this passes, this is where they're just needed 0.1% more to achieve the outcome of not passing. But TBH, even if this passes, and I'd encourage everyone to vote yes, I'd still consider it a failure either way. The fact that this contentious shows that there's either great information asymmetry or greatly differing incentives. The former is fixable, the latter is serious. Again, disorganization does not equal decentralization. Now, I think that part of the someone asked before, like, maybe this felt a little bit rushed. I think one of the things that Solana has rested its laurels on, deservedly so, I think in many instances, is like it's more of the move fast and break things culture of Silicon Valley, right? Like, and there's been a lot of poking at Ethereum. Again, I think some pretty well deserved, that there's not a winning culture anymore. We don't want to ship stuff, and we're moving too slow, et cetera. And part of that might be a cultural thing, but part of it might just be a maturity thing as well. And so now the question, I think that there was probably part of the reason that this vote tried to move so quickly is, one, Solana's not used to having multiple different, the amount of eyeballs and attention and money on it, and it's not used to having this many stakeholders. And so now there's probably a little bit of a, hey, this is what we're used to in terms of being able to push these things through, but also we want to prove that we still have this culture. And what they found was that actually, when you introduce more sets of stakeholders here, maybe this is inevitable. Maybe this actually isn't a cultural thing. Maybe more of this was just a stage and maturity thing than we all thought or gave it credit for, right? And so the question, at least that I ask myself, is like, this is the Cosmos got the end game exactly right, all the good and the bad, right? Like, is there just like this inevitable gravitational pull towards every lesson that we learned in Cosmos? And then at this point, is Cosmos just the Cassandra of crypto? Because, Cassandra being, the prophet in Troy who warned everyone, and her curse was that she was always right, no one would believe her. It's like, I can't tell you how many podcasts we've done on Bell Curve about this stuff years in advance that just know it. And all of this stuff is coming to pass. It's very interesting, right? To see guys like Zaki on Twitter saying, Anatoly, like, careful what you wish for. And he's like, nah, nope, this is good. And it's just very funny to me that all of this stuff has been pioneered in Cosmos, and we're determined to run it all back. I'm unclear that the results will be very different.
Apart from Cosmos, who's now like, hey guys, all right, we got Skip in charge. We're going to like actually listen to them, and we're going to kind of get on the same page here, and we're going to do something. And yeah, I think I've worked on a lot of proposals. I've never worked on one that somebody didn't say felt rushed. Like, no, we were talking about this shit for months. And we were, debating in the forums. And then I got on Twitter, like, as it gets closer to the vote, and then people find out about it and get all up in arms that they weren't paying attention. Right. Like, that's why it's really hard when you like actually formalize these things and codify them, and like it's all out in the open, and there's a process here that people can engage with, but they feel like it's never going to be perfect, right? And so I do wonder. It sounds like they're going to keep going the Cosmos direction. They're going for the next one. They're going to have actual stakers be able to override the votes of their validators. And yeah, we'll see how it plays out for him. But it's kind of amusing from watching from the sidelines.
And like maybe, I mean, and so there's probably some very large, I mean the question would be, right, like, I mean, I think Solana has some very large holders, they're token holders, right? Like I assume if those token holders or VC funds or whomever are delegating to a validator, they made their opinion pretty well known. I'm sure those validators, depending on the size of the delegators, like looked at that and said, they're either like, those validators are either losing customer today, right? Or they're spinning up a whitelisted validator, like so that they can vote how they want to and make sure that their vote is like heard. Or they voted yes already. Right. And like this is like, again, the problem with Cosmos, right? And like you're gonna tell the validators again to like, hey, pay attention. And so what winds up happening is like voter apathy. Like if we're gonna just keep pushing this through until like it gets voted yes, then what the hell are we even doing here? Like we may as well just do the benevolent dictator thing and just do it, because like if it's going to be like this was the wrong answer, you know, like we don't get to do the presidential election over again. I'm sure many people last week, given the prices, were based on the timeline, a lot of people were wishing they could have voted differently last week, right? So I think like you know, like I don't know. I think it's like if that's what you want to do, and if that's where you are, and that's like this is sounds like a pretty big change, right? And like maybe you're not there yet. Like maybe you need to start with some smaller governance proposals that like don't change things as much for the people that have a self-interest in like making sure things stay exactly the same. And like shaming people online is like, it's a strategy. I don't know if it's a winning one. I don't know if like you win favor by like going, hey, like I went through the list and like here's the 14 like dipshits that like didn't vote for this. Like go undelegate from them. Like I don't think that like I mean it could change their vote. Most people are going to tell you to go f off and to like, you know, like I'm going to dig my heels in even deeper. Like there'll be like, so there's something fundamentally and systematically wrong with this approach. Like we did vote on this, right? And like I did vote no, and now you're like shaming me and coming after me because like I voted no. It's not like a great welcome to Cosmos. Like this is Cosmos, like right? Like this is not a great feeling. And the more you're talking about things like this, like the more it's a distraction from like the ultimate like approach that we were talking about from the very beginning, which was like we just want the network to be better. And that goes for like all of these networks. It's just the problem is like people have different opinions on like what better is.
Yeah, I also think one thing that's interesting is that at the end of the day, this is like a non-enforceable vote in a lot of ways. Like if the validators all change their client, like the network is going to change, right? And I think that that's like something that Ethereum is at least honest about, is like we could do token voting here, but at the end of the day, that's just social signal. And what matters is people running code on machines that are securing the network. And then we also socially agree that that is the network, right? And so I think that there's going to be something interesting here is like if Solana, you know, decides that this is the right direction, or, you know, maybe they talk to Barry and, you know, they realize that, you know, the Cosmos dead end is going to go full circle for them as well. It'll be interesting to see if they commit to this as a governance model, or if they kind of pivot and ultimately opt out. Because at the end of the day, I don't believe, and I'm willing to be totally wrong here, I don't believe that these are enforceable votes. I don't think that they actually immediately change things on chain. And I do believe that there's like downstream social implications where like you can easily see a future where the vote passes by token holders, but the actual people running the code, because it's hard to run Solana validators, are like, we're not going to run this code, right? And so I think that, you know, in the context of governance, and especially with layer one governance, at the end of the day, it comes down to social consensus on what do the people that are running the code and what do enough of the ecosystem participants that Mike was talking about earlier actually believe is the canonical network. And so I think that L1s have very interesting governance properties compared to like, let's say, smart contract protocols or things that actually can have votes change the logic of what they're doing directly. So it kind of gives them like a weird like escape hatch in a way where they could, you know, circumvent their own governance processes, or their community can circumvent their own governance processes. And I think that I think that's one thing that I and many other people appreciate about the Ethereum Foundation and ETH's governance is they're at least very honest about that, right? So I think that that's something I admire.
Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow at Trade on Desk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today.
I think that, in the same way that I think part of this depends, but there's probably going to be many different types of flavors of this play out. And I think it will depend on where, frankly, Bitcoin and maybe to a slightly lesser extent, Ethereum are slightly special here in the sense that they were just born at a very different time in crypto's development. And, you don't see any modern, L1 adopt that type of governance structure today. And even with the fullness of time, I'm not sure if they would. Again, I really come back to what is the vision of what you're trying to build here and trying to reverse engineer and work backwards from that. I think a really interesting question, Cooper, is this idea of ossification in general and complete backwards compatibility. And, it's a tough question because on the one hand, I completely understand that, right? And I think this is the US, what they do very well is a governance, in terms of how the governance actually works sometimes is you're not going to get rugged, right? So like getting something passed through Congress or better yet, enshrined in the Constitution, right? There are even levels to how difficult something is to unrug. You can basically, you can take that to the bank, right? And from a business planning standpoint that you're not going to get rugged over a certain period of time or something like that, right? Which is actually kind of one of the problems, by the way, with all these executive orders getting passed. They're very easy to undo, as opposed to moving things through Congress. But and that's not the case in other countries like China or countries in the Middle East where you can kind of turn on a dime. On the other hand, you do need to things do change, right? And at the end of the day, these aren't really governments; these are tech platforms. And there is an argument to be made that if you can't adjust to the times somewhat, right, for really important things, and maybe there should be a higher hurdle rate and threshold to adopting these things, then you do risk getting left behind, right? And so the challenge is how do we, as these L1s get larger and more, hopefully you have a more diverse set of stakeholders, what is the hurdle rate for what different type of upgrade, I guess.
Yeah. And the problem is the answer to that question around ossification versus, improving the tech, ask the apps, right? They will have the correct answer because it's either don't change anything. I know it's not as good as it could be, but don't change anything. We have a lot of money held in these smart contracts and it'd be a huge pain in the ass. Or it'd be, our business is losing because this tech platform is so shitty, but we love basically the culture of Ethereum. We don't want to leave. Please, upgrade the L1. And it is hard because there is no naive, sort of civil mechanism where you can filter through the voices at the app level, right? It could be anybody. And the only answer I've seen that's pretty decent is having them run a validator. And I think hopefully we can see more of that, but at the moment.
Myles, so I agree with you, but I also think you need a there's no one set of stakeholder that always has the right answer. Apps might have, you might end up asking apps and they're kind of okay with their own little fiefdom, right, on Ethereum, right, where they might actually not be thinking about what's best for the network. They might be thinking about what's best for their applications and their own scaling, or company building objectives here, right? There is alignment between the demand side and apps and the network, but they're not one-to-one the exact same thing. Right, there are plenty of examples where those incentives actually diverge. So I think that's one important set of voices and stakeholders to incorporate. But I don't think you can always just ask them and they'll give you 100% the right answer in the long term, right?
Even there sort of was a governance proposal recently on Ethereum, right? It was the gas limit in Greece, and And like, I mean, if we just go back a year, it was like, it took a year for the gas limit to increase. And like, we had the EF saying, no, 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 we can't do it. We had like Nethermind saying, no, 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 we can't do it. I think it was Nethermind. And then we had like, or maybe it was one of the other client teams. And then we had like everyone else saying like, no, like, why haven't we been thinking about this? Like, why haven't we been prioritizing this? This seems like an easy win. So like, who the heck is thinking about this? Like, are the validators supposed to think about this? Is the foundation supposed to think about this? Or like, is it the apps that are supposed to think about this? Like, is it Max Resnick that is supposed to be thinking about this? Right? Like, who the heck is supposed to, like, I'm thankful he was thinking about it, but I don't think he's the guy who was like, should be like in charge of thinking about it. And he wasn't in charge of thinking about it. He just kind of like picked up the torch amongst like a bunch of like a bunch of anons. And so like, it was just sort of like, then I reached out to a few validators. And I was like, hey, what do you think about this? And they were like, well, you know, we're kind of like talking to like the client teams, and they think that they need more time to like test it. And it like turns out it was like big nothing burger, and like it just worked. Like, did we not just like try it on testnet and like see how it went, and then like do it? I don't know. Like the process even there is broken, right? Like there's, we don't have to dunk on the EF any more than we already do. So like, it's just like there's just like these processes, and like they're not even that process is like, even if the tech was codified or ossified, right? Like, can we increase the gas rate limit, right? Like, I assume we can still do stuff like that if like the tech is better and the infrastructure is better, or maybe we can't. I don't know. It seems like there's just, whose responsibility is it to do what, and like who is supposed to be kind of the champion of certain things, and like, are there people who are champions that you should listen to because they have the technical expertise, they've done their homework, and they said this is the best and this is why this is the best. Like, maybe it's better if like that proposal didn't come from multicoin. Maybe multicoin is the right team to have that proposal come out, right? Like, no shade either way. Like, does it have more credibility that it comes from a venture fund, or does it have less credibility when it comes from a venture fund? Does it have more credibility when it comes from a researcher? Does it have less credibility when it comes from a researcher? Like, does it have more credibility when it comes from Anatoly and Mert or Vitalik, right? Or Justin, right? Like, I mean, I think there's like limits, like there's kind of like, there is a hierarchy, and there are people who are going to listen to you about certain things and not listen to you about other things, and like make sure that like the messenger is the person who's going to, if this is something that like people think is like very important to do, I think the messenger does matter. And like, you have to kind of have that person really pushing hard for this thing, or else like it falls short, because it's not the person who people want to hear from.
So, well, I agree with that in practice, that's the case. But I wonder if, like, there's a question that I would pose to you guys. At some point, it is kind of surprised me actually that governments and BlackRock, et cetera, have accepted Bitcoin here without maybe they do really have a good understanding of how the governance model of Bitcoin works. But, you know, there's a lot of like very magical thinking, obfuscatory, like I hear a lot of people like the math. People like to talk about the math of Bitcoin and the code. It's like, no, it's not. They could change it anytime, right? Like if you mustered enough people, there's no math and code here. Like there's cryptography, yeah, but you know, it's like really obfuscatory, like pretty dishonest speak, in my opinion. I think that's been like passed out as like the Bitcoin religion, and I can't tell if some of the newer adopters, like the Larry Finks of the world and his team at BlackRock, have like really dug into what's underlying that 21 million Bitcoin promise. I'm sure someone probably has, but I'm surprised that people haven't insisted on like, here's how the governance process works. Here's who like the US government, right? Like no one's like, hey, it's all social consensus. It's like, who's it proposing? Is it Donald Trump or Biden? Like, depending on who it comes from, no, there's like, people can write bills, right? And then it depends on the process and who it goes to and who's accountable for making the decision. Like right now, it matters a great deal if it comes from Tushar or if it comes from Anatoly, but it should matter less over time who the proposal is coming from, as opposed to who is ultimately making the decision. And that should kind of be written down and understood, right? This like rough social consensus I get at this point in time has made sense, but I want to keep bringing it back to like, what is the ultimate end state for these things? And if you want this to be like a non-sovereign store of value or bond-like thing, I'm just surprised people haven't insisted on like writing this down and being like, who is actually accountable for what?
because like the rough, it just surprised me, the institutional acceptance actually of like rough social consensus and none of this stuff being understood, or maybe they are understanding it and diligencing it and I'm just not a part of it. But that would be like, what do you guys think of that idea of this
I'm
stuff?
actually starting to write my first Solana improvement proposal in the background here. I'm going to call it
Oh,
the
no way.
Enshrined Max Resnick strategy. We're just going to delegate everything to Max and let him decide what happens. Please vote yes when it comes out. I appreciate that. On the subject of like Bitcoin governance, I'm sure that they have a sufficient level of understanding on what it takes to push changes to Bitcoin Core to actually get it distributed out to enough people. And I'm sure that they have a rough idea of longest chain based consensus. Otherwise, I think it's going to be like, really hard probably for them to get such significant exposure. And like, I'm sure that that was part of like ETF diligence and all these other things. So I think that ultimately Bitcoin actually probably has one of the simplest governance structures.
Yeah.
I think that someone should formally articulate it in a concise and like canonical way. I totally agree with that. That would be very helpful. And I think that one thing that the industry is largely missing out on is like, I think Laura Shin's probably one of the closest to this, is like historians who are, kind of articulating and, trying to catalog these pitfalls as we go. Like, where is the canonical source of truth for all of this cosmoification that we keep talking about? Like, we all know that it's there, but like, how do we point to it? Is like a very interesting question. I can't imagine a world where the 21 million Bitcoin changes. And I do believe that, we'll just get Bitcoin Classic or Bitcoin Larry Fink version of it or something like that in the event that they really want to change something.
You have to like talk to the historians, right? Like the one historian that I know on Ethereum is like that I'd like to talk with is James Prestwich. Like the man knows like where all the skeletons are hidden, right? And like he'll tell you about there's like there were supposed to be 3 protocols for Ethereum, right? And like essentially now there's only one. And like there's supposed to be a messaging platform. There's supposed to be a few other things. I forget what the other one was, but like storage. There's supposed to be storage, messaging, and then like the L1, and like that was going to be like the whole kit and caboodle. And then like ultimately like couldn't build the other 2. So like I think like talking to James is always like a pleasure because he'll just give me this information about things that are just like, oh, in 2017 like we were doing this and this, and in 2016 we were doing this, and it's just this like but those historians like that's like where's that written down? Nowhere. Like you have to go into Reddit, you have to like read these articles. There's this guy named I think Ari who like just rage quit the EF at some point, and like he deleted all his Reddit posts, and so you can't even go back all the way because like those aren't even available. It's just like it's wild to piece it together, and more people should probably read the Cryptopians just to get a sense of what it was like back then. That's the best we have right now.
Yeah, I agree.
Mike, I'm curious your take. Do you think that this notion of like social consensus, longest chain based, the Bitcoin model, is like one? I'm curious. Do you think it's working for them? And then 2, I'm curious. Do you think that they have governance to product market fit as you articulated?
The Bitcoin?
Yeah, specifically in Bitcoin's context.
I do. I think that one thing that will be really interesting over the course of the next decade or 2 is how governments end up adopting or not adopting crypto in general. Like, I think that people have always thought of, people love to say that blockchains coordinate people. But probably, you've been thinking of people as the individual unit of who you're coordinating. Blockchain, probably the end game is to coordinate governments. Like governments aren't going away. And they're going to use these things. And it's unclear to me how, like, there's a really great quote, Austin Campbell, who's a professor and he's doing his own stablecoin thing at the moment. He made this comment about the strategic Bitcoin reserve. And his thought was, careful, if you tell the government it's strategic, they're going to start thinking about it in a strategic way, including moving mining operations in the US. If there's a big mining operation in the Middle East, maybe they don't like that. Maybe there's a drone strike. Like these are the things that governments will actually do. And so, yeah, I'm actually just thinking about what I said before. I was probably a little bit naive. I'm sure that there is a deep understanding of how the governance process actually works here. I would guess that there's a pretty deep understanding when it comes to something like a global money or something like that. And I think that for each of these L1s, the reason I keep coming back to like, what is the North Star here for each of these things? I do think you need some hurdle rate to adopt and change the tech if your vision of your L1 is it's a utility layer, if like the value comes from utility, it's technology at the end of the day. I think you need to be able to update it in some way. There should be a hurdle rate for major adoptions. But I think, it's kind of an interesting question at this moment in time to ask, why are people going to hold any L1s? Like, look at the ETH BTC chart. Since it's not looking, ETH and ETH BTC are both brutal looking charts at the moment. And I'm not picking on ETH alone. Solana looks like it's about to run back. The Sol BTC is looking like it's going to, ETH BTC just front ran Sol BTC. And so I think you need to really ask yourself, like, why is anyone going to hold one of these L1 tokens in this new world, right? And I often hear people, especially in Ethereum, say that Ethereum, the network, can be successful without ETH, the token, going up. And I don't believe that. I don't think there's no empirical evidence of a network working without its token going up. To me, those aren't the same thing. And I think there's this story that we've told ourselves around moneyness of an asset. And maybe you don't need fees for this asset. Maybe you can just like, the TVL matters and it's use as collateral. You lock it up in a smart contract. Like, I think if I could ask everyone in crypto to question one sacred cow, it would be that. I think that the only reason that anyone's going to hold L1s outside of Bitcoin is fees, like yield on these things. And so that's why I think for me, I'm looking at these L1s as there's probably three buckets here. There's Bitcoin, which is its own special snowflake that I don't think anyone's ever going to replicate. There's a larger bucket of L1s like Ethereum and Solana, which strive to be global. Ethereum, Solana, Celestia, they strive to be global, right? They're not domiciled in any one. They're non-sovereign, which is an important component, right? Like no one sovereign fully owns them. They should be deep and liquid, and they should generate a strong yield. I kind of think these are commodity-like treasury things, right? They have the same, relatively similar profile at maturity of a treasury, which is why you might want to hold them. And then eventually you might have more like country-specific, vertically integrated, Hedera Hashgraphs. So I think that's a really interesting model, right? But it's a different thing, right? That looks to me more just like a business, right? I don't think this looks like a super new thing. And so I think you have to, when you're thinking about what is my end state, why are people going to hold my token? What is the value proposition? I think for these things that want to be non-sovereign, you do need some amount of decentralization. You have to be geographically dispersed. You can't rug your users too often, but you need a way to upgrade for major tech things. And then you need a way, like the reason I think Ethereum is waking up is because they're realizing I'm not going to generate any yield for my token. And my L2s are actually adopting USDC faster than ETH, right? So I need to make a change here, right? Like I think this actually based in native rollup stuff is quite healthy. It's like, all right, I got to do something here. People got to hold the ETH token. So I think that's where I start from is what do I think it's going towards at the end state? What's the value proposition of the token and the ecosystem? And then how should governance be designed for that? It's like the way that I think about it.
Yeah, I think it's really interesting. And I think if you historically think through why did we believe, like, in 2018, why did we fund a bunch of alt L1s at really high valuations? And I think that this has been a historical trend. And I think that like the implication has historically been that your network is predicated on some amount of economic security relative to the use cases that you want to attract, right? And so if you want to have an L1 that's issuing RWAs, you have to have a fully diluted market cap above $1 billion or something arbitrary. Otherwise, you're subject to like potential economic attacks that could actually like take over your network, change your state, and basically modify the code and be like, oh, those are my RWAs now. I don't think that is true in practice. And I think that we're realizing that increasingly, that economic security of most infrastructure is kind of a meme. We have not seen any successful economic coordination attacks. We haven't even seen any protocols actually get acquired or purchased, right? Like in theory, that is something that if your network was underpriced relative to the economic security of the values or like the products it's offering, someone would have came in and bought your network and then took the value out of it. And I think that this is actually directly related to like the low float, high FDV meta. And you had to buy L1 assets or these assets because they had to be sufficiently high enough in value to attract the use cases that they were trying to sell. Like no one wants to issue $10 billion on stablecoins on a network that's secured by $100 million in economic security. And so I do think that that's like why a lot of people would hold L1 assets is because they believed this economic alignment argument. And I think that we're moving out of that in a lot of ways.
Yeah, and that's so unhealthy too, because you have to, basically launch with a really high valuation to as maybe like table stakes to attract apps, especially like high value apps, as you said, right? But now you have a high valuation that you need, token holders want justification for, right? So now you have pressure to monetize just at the stage where you should just be optimizing for growth, right? And like we're seeing this, in Celestia right now. They're like, yeah, if we, we could 100x the fees right now, and guess what? We'd made $30 million last year if we did that. And it's like, well, no, you wouldn't have, because the reason there was that much, usage is because you are optimizing for growth right now, and that is the right thing to do. And yet, this is going to come up again and again if you launch at a valuation of 15 billion, and then Blockworks research guys can put out charts and be like, they made $70 yesterday, and that's bad luck. Now everybody's like, yeah, okay. I say, so what is the line of sight to justifying this valuation?
You have to provide it. You have to provide it. Like, yeah. And that's just Cooper, that because I agree with you. Like there were a lot of arguments again backing Cosmos in the day of like, how are we going to secure, all of these apps if like the value of but the logic there is to my mind, it's backwards. It's like there are all these apps that we want, and therefore the base layer security app needs to be here, right? Like new investors aren't going to think like that. They're not going to be like, oh yeah, I want to do all this stuff, but like this needs to be here, so I'm going to like, no, that no one, the logic has to be, why are people going to hold my token? And people get really uncomfortable with that. If you ask people that, they like kind of go wave their hand and say a bunch of stuff, but it really, I think for L1s, it has to be yield. It has to be yield or a return that you're getting on that asset.
It's been a yield, and it's been like, I think like so the Ethereum is money debate, which like I think I presented something once, right? Remember? And I was like, yeah, like ETH needs to go after money, and like we can talk about it, and like and we can debate it, and like maybe it's not the right approach, but ultimately it's a medium of exchange. And like in the early days, like stable coins weren't as prominent as they are right now, right? And so kind of to go back to like the Ethereum can exist and ETH can go down, like sure, maybe for L2s because like they're focusing more on stablecoin pairs than they are on ETH pairs. But all of the assets that are and so what are we doing? Like in centralized exchanges we trust, and the value of like these tokens that are like paired with ETH are like the true price is like always going to be on a centralized exchange. Because as far as I understand, for most like OG tokens, like I assume if I looked at like Aave and I looked at Maker and I looked at Uni token, that like one of the biggest pairs, if not the biggest pair for these assets on chain is ETH, right? Wow. Like I assume. And so like it was money back then. Maybe it's not money anymore, but like I think if L2s start to go, hey, we want stables, we don't care about ETH. ETH is more of a collateral asset than it is a base pair. Okay, maybe there's like an argument to be made that like Ethereum can work, like people I guess will run a validator, and like there might be revenue that goes and is attributed to like the ETH validators, and you don't need ETH the asset in order to like have functioning economies. But we're moving towards like centralized stable coins as like the base pair of everything, and we're also kind of seeing that in Solana right now. Right, like when you look at the 3 largest meme coins, and I think also the 4th one, assuming that Kanye does, the Yeezy token does launch, which
hope not. They're on chain. Please.
They're on chain. They're there. Like the pools are there. There's just like 60 of them or something like that. So good luck, guys, figuring out which one it is. But like whether it's like Melania, whether it's Trump, whether it was Libra, there's single-sided LP liquidity, and like the base pair was USDC. Like these guys didn't want to mess around with Sol.
Well, isn't that the demand? That's the revealed preference, right? From the
there was revenue, like there was revenue being generated, right, for the Solana like validators and stakers, because like you had to pay, and it was like the volume was I think like in the billions of dollars for like 24 hours, but like the Sol token like Does it have to exist? Does like the Ethereum ETH token have to exist in a world where stable coins are the base pair? Like,
Yeah,
uh,
I thought it was interesting. This is like related. I saw that the superchain deactivated the feature to have custom gas tokens or like to have USDC.
Yeah, yeah,
Um,
yeah.
and I do wonder if that was something that was required in order for like interop to work for the superchain, like something purely technical, or if that was like kind of some sort of social signaling here. Like we're not like those other rollups. We're the ones that are on your same team as Ethereum. And yeah, I wonder if that's actually a winning strategy. If 99% of developers and users just want to pay for things in USDC or US any sort of USD.
I don't think that was a technical constraint. I think that their team's so good. If they wanted to build fee abstraction for multi-chain interop, they probably could figure it out.
Okay.
It's interesting because I feel like I'm in this category where like I totally agree with Mike's point that you want to hold assets and you want to be a part of an ecosystem that's going up. There's no historical examples of networks that's tokens have gone down only or continuously down only that have been successful. Like no one wants that. But at the end of the day, I hold ETH and I like would consider myself like ETH aligned in a lot of ways because I want to use the world computer, right? Like at the end of the day, I want to have access to the world computer and be able to use it. And that is what ETH is to me at least. And then if there's a world where like let's say something else becomes the world computer, whether that's like Delta or something else, um, I want to hold that asset, right? And I think that in order for for that network to be like the canonical world computer, to Mike's point, its token probably has to go up at least at some point. It has to have viable economic activity. And I think Jim articulated well that ETH being down this cycle has been very detrimental to the broader ETH economy, both applications built on top of ETH and also the rollups that are built on top of Ethereum. They're directly correlated. And so, like, if you want your network, you want your world computer to be successful, that means you want the applications to be successful on top of you. That means that you probably need an asset that is going to appreciate in value in some capacity, or at least like have enough fluctuations in value that there's upside for people to participate in.
Yeah.
Yeah.
You know what? I think this space, just like everything else, has been very influenced by Bitcoin and some of the early philosophical thought. And so, if I asked you guys like what makes a good money, you'd repeat probably some like Austrian economist, right? Like divisibility, storability, fungibility, right? Like all of this stuff that we've probably listened to on podcasts in the early days of it. But the way that there is a lot of very sophisticated and modern thought that goes into money, and just like anything else, when you dig into it, right, the US has a difficult time even tracking what is money, right? Like there's like M0, M1, M2. No one really like the range of different monetary assets has changed quite a bit, right? Like if you have, it used to be pretty simple. It's just like bank reserves and local or domestic bank deposits, but now you got a bunch of stuff overseas. You've got all of these different things. And so there was a really influential interview that I listened to a couple of years ago with an ex-central banker. And if you listen to people who have worked at central banks or work at central banks, they don't make a huge distinction in between like bonds, like sovereign bonds and money. Like sovereign bonds equals money for big institutions, right? Like no governments or central banks are like holding paper money, right? Like they're holding staked money. They're holding staked dollars or staked RMB or staked euros, which is the bond, right? And so, I don't know. There's people really debate store value, medium of exchange, whatever, right? Like there are lots of different types of monetary like assets that have a monetary quality to them. I would encourage everyone not to try to map one to one. Like, is an L1 this or is it this? Like, I just think you need a simple reason to own it, to make the token price go up. And like the easy one that I think a lot of people will get to, and what excited people about the world computer vision in the first place is, Cooper, to your point, it's like, all right, I have direct access to this thing. The other thing is it's just an index bet on whatever is getting built on this, right? Like to me, as like a investor, it's like, okay, a lot of cool shit is being built on this layer. Oh, and there's a token that kind of represents the whole thing, and I get some sort of slice of the entire economy. Like, give me that one, right? Like that. And I think we've lost that vision. And I also think that over time, history's long, right? Like if you read history books, like they'll have like one sentence to describe a decade, right? I would guess that this period of time, especially for Ethereum, is just like, yep. So this was the vision we're building towards. It was the right vision, but there was a little bit of a struggle in the beginning when L2s first got created about what the revenue split was, right? Like that you could sum like a whole decade long or 5-year long period up with that one sentence, and I think it would be accurate. And I think that we're starting to return to that. Basically at the current moment. So.
Yeah, I'd be really excited about a world where Ethereum is willing to acknowledge that there should be an enshrined value capture mechanism between the L2s, and whether that looks like native rollups, whether it looks like execution shards. I think that the sooner they're willing to acknowledge that, the better. Absolutely.
All right, fellas, this has been a really good one. Maybe we could even do a part 2 on. I wanted to talk to you guys about DAOs, but we gotta wind down here. But maybe we can do a part 2 just on the dismantling of DAO governance here as a podcast. But like we did a good one here on. I focused on the L1, which is I think great.
Next time we need a punching bag when there's not much news going on. We'll do that episode.
All right, cool. Guys, this was really fun. Cooper, thanks for coming on. Myles, Jim, appreciate you all. And we'll have to do it again sometime soon. Cheers, guys.
Thanks for having us.
See you guys.
See you guys.